Hello, ladies and gentlemen. My name is Greg Mikulowski. Today's date, January 15th, 2015. I'm going to take a look at the Aussie versus U.S. dollars. We head into the employment report, going to be released at 7:30 Eastern Time, 11:30 local time in Australia. First off, let's take a look at what they're expecting. We're expecting 5,000 new jobs in the month of December. That comes after a pretty strong 42.7 thousand job increase in the month of November. Of that 42.7, however, 40.8 thousand were part-time workers, so there could have been some sort of seasonality, part-time workers for the holiday season, something along those lines that could have caused those numbers to be a little bit skewed to the upside. We'll see if that shakes out in this current month's report. 5,000 new jobs expected. The unemployment rate is supposed to remain steady at 6.3. You can see the trend that we're in that measure of employment. Not very good there. Some suggesting that if the employment rate continues this trend up above 6.5%, we're going to see the Reserve Bank of Australia starting to think about easing rates down the road and easing them sooner rather than later. Participation rate also not all that great at 64.7, banging along the bottom of the most recent ranges that we're seeing. Not a good sign there as well for the employment. So bigger report coming out here. Again, comes out at 7:30 Eastern Time, 11:30 local time. Let's take a look at the Aussie versus US dollar from a technical perspective. And if we take a look at the hourly chart, where are we? Well, we've been in this up and down trading range now since the middle of December. Prior to that, the market was trading on a downward trajectory. Had a nice little sharp move in September, consolidated for a few months and moved down again. We're in that consolidation phase again, trying to figure out, do we go higher or do we go lower from here? And the employment report might get us kick-started out of this range that we're seeing. We are sitting right around the midpoint of the trading range, with the low being established here on January 7th and the high not very far away from that at January 10th. That's been the high-low trading range over the last close to month worth of trading. So at the midpoint of 81.42, we're only 3 pips away from that level. That says to me that the market is waiting for this employment number to give us some idea of whether we go higher or do we go lower, or at least give us a push in that direction. What we've seen in trading here today is a sharp move to the downside in copper, and then we saw a rebound into the London and London and New York session. But still, market's really preparing for this employment report. So what are the levels that we're going to be watching through the employment report to determine bullish or bearish buys? If the market comes out weaker than expectations, what I'd look for is a move away from this 50% and move back below the 200-hour moving average. If we go back and discount this move that we saw here in trading here today, over the last few days, we're seeing the market hold support against that 200-hour moving average. We held it here, we held it here, we held it here, and we held it here. So this move to the downside was the break, and that's why we saw the momentum. If we go back below that 200-hour moving average in trading today after the employment report, we could see further momentum to the downside, but that should turn the bias more to the downside for the Aussie versus US dollar. So we'd look for a break of that and then start to look toward our low level here at around the 80.87 level. Look for trend line support here around the 80.73 level and start to take out our lows. So we remember we have the double bottom here in the month of, well, in this year's trading, or very close enough to it. The last time the market broke through the previous low, we could only get through by a couple pips. So that's going to be a tough support level on the downside if we move that way. Now on the top side, what do we have to look forward to, or what are the levels that we're going to need to watch? And first off is the 100-hour moving average. You need to get above that at the 81.57 level. And then we have this little trend line here connecting the most recent highs just over the last few days. That's going to come in around the 81.78 level. If we open up, move above that level, look for further momentum to the upside and look for that trend line to hold support. The next upside target would be this high price from about the middle of the period that we're looking at here. That high came in around the 82.14 level, and then the high that we just saw in last week's or this week's trading, as a matter of fact, at the 82.53 will be our next target on the top side. Not far above that level is this trend line here, which comes in around the 82.67 level. That trend line on the daily chart connects our lows going all the way back to August of 2013 and the low going back to January of 2015. So that's a look at the economic data and also some of the technicals that may be driving the Australian dollar as we head into that key employment report this afternoon. Good fortune with your trading. My name is Greg Michalowski for ForexLive.com.